So yesterday, the Bank of Canada Governor Tiff Macklem stepped on the podium in Ottawa to deliver his thoughts on the economy, on interest rates, household debt, trade wars. But if you were listening carefully, and you should have been, you might have caught a very different kind of message. It wasn't shouted, it wasn't dramatic, but it was absolutely unmistakable. The message was this: if Canadians start using a money the government doesn't control, the government will find a way to crush it, to stop it. Here's what Macklem actually said, and this is his direct quote. If cryptocurrencies become a form of payment, we would need to introduce new legislation in Canada to ensure that we have proper protections in place. Now think about that. Not speculation, not scams, not ransomware. Payment. You using your money in a way the government didn't authorize. That's the red line. That's the threat. So what does that protection mean in this context? Does it mean your banks won't be frozen? Let's not play dumb. It means regulation, surveillance, taxation, and if necessary, elimination. It means the state stepping in and saying, no, you can't use that kind of money. Why? Why can't you use crypto? Because it works, because it's stable, because it doesn't lose 20% of its value in 5 years like the Canadian dollar did. And it's because it doesn't need them. That's the part that Tiff Macklem and the bureaucrats around him can't stand. Crypto, especially stablecoins and decentralized currencies, don't need a central bank. They don't rely on trust in the state. They don't inflate because of an election cycle. They don't bail out hedge funds or subsidize deficits. They just work. And in a moment where the Canadian public is drowning in mortgage debt, where groceries cost doubled what they did 5 years ago, where hedge funds now control half of the country's bond auctions, that sounds pretty good to a lot of people, which is exactly why they're so desperate to stop it. So let's be honest here. When Macklem talks about financial stability, he's not talking about your stability. He's not talking about your family, your savings, or your ability to put food on the table. He's talking about their stability, the system, the regime, the apparatus that allows Justin Trudeau and Mark Carney to run record deficits, inflate away your income, and hand control of the economy over to unelected bureaucrats and foreign capital. And crypto breaks that monopoly, and that's why they fear it. And let's be brutally honest. The Canadian economy today doesn't run on productivity. It doesn't run on exports, industry, or innovation. It runs on debt. Massive, endless government-issued debt. And what backs that debt? Government bonds. Bonds are now so over-leveraged, so gamed by hedge funds, they've become a ticking time bomb. And you might ask, why is this a ticking time bomb? Let's talk about what's actually happening. Let's start with April 2025, just a few weeks ago. The U.S. administration dropped a surprise round of massive tariffs. It shocked the market. What happened next wasn't just volatility, it was something unnatural. Something that broke every rule on how the market is supposed to behave. Normally when the market panics, when stocks fall and investors get spooked, they run for safety. And what's considered safe? U.S. treasuries and the U.S. dollar. That's what they teach at every business school on earth, but not this time. In April, we saw stocks, bonds, and the US dollar fall at the same time. The so-called safe haven assets didn't go up. They collapsed right alongside everything else. Why? Because they're leveraged. Because hedge funds, loaded up on borrowed money, had to sell everything all at once to cover their margin calls. They weren't just adjusting their portfolios, they were scrambling for cash. That panic wasn't about risk, it was about funding. It was the fact that the whole system, especially in sovereign bond markets, is now built on a mountain of debt used to trade more debt. And when the tide goes out, like it did in April, you find out how fragile it really is. Sounds familiar? Well, it should be, because we've been here before. Back in September 2019, long before COVID, long before the lockdowns, the US repo market suddenly broke. Overnight interest rates, usually stable borrowing, spiked from 2% to 10%. Trillions of dollars in short-term funding froze. Why? Because the same hedge funds and trading desks had leveraged themselves to the hilt using the repo market. Basically, these guys are the pawn shops for government bonds to squeeze out tiny returns on enormous positions. When liquidity dries up, the system nearly imploded. The Federal Reserve had to step in immediately and do so with emergency cash. Hundreds of billions of dollars to keep the system alive. That was the real start of QE infinity. The public The panic wasn't public, but inside Wall Street, they were terrified. And here's the part that no one talks about. Canada wasn't far behind. The very same kind of leverage strategies are now deeply embedded in the Canadian government bond market. In fact, in 2025, the Bank of Canada admitted that hedge funds are now buying nearly half of the BoC bond auctions. That means our public debt, our deficits, our spending, our programs are now being supported by the same kind of speculative leverage that nearly broke the U.S. system twice. That's not resilience. That's a bomb with a timer on it. And every time volatility hits, whether it's tariffs, inflations, or geopolitical chaos, the timer speeds up. The April episode, that was just a warning shot, a glimpse of what happens when the people propping up the system decide to cash out. And they will, eventually. They always do. So when Tiff Macklem warns you about stablecoins or crypto being unstable, ask yourself what's more unstable. A digital asset backed by reserves and transparency, or a 1.2 trillion debt market being flipped on margins by hedge funds who can pull it faster than the Bank of Canada can finish a press release. And how is that debt serviced? Where does the growth come from that justifies piling on more and more borrowed currency every year? Immigration. Not organic growth, not productivity gains, not technological breakthroughs or new industrial output, just raw population expanded, imported in bulk. In the last 36 months, Canada had welcomed nearly 2 million immigrants, an unprecedented number for a country this size. That's the equivalent of adding the entire population of Manitoba. And why? Because under Trudeau-Carney worldview, growth isn't about building or producing, it's about bringing in more people to fuel consumption, pad GDP, and keep the housing market from collapsing under its own weight. Mark Carney himself said this out loud. Immigration, he argues, is the solution to Canada's long-term fiscal sustainability. Translation, we need more people to support the taxes to fund the debt. But that same strategy has consequences. Just ask the Bank of Canada. Because in report after report, the BoC admits that what every Canadian already knows. You can't afford a home. Not because of interest rates, not because of greedflation, but because of supply and demand. Their own fiscally stability report states plainly that persistence imbalances in the housing market are a result of demand far outpacing supply. Where's that demand coming from? When you inject 2 million residents into a system in 3 years and fail to match that with housing, infrastructure, and new service, what happens? Prices explode, vacancy rates plummet, and families are priced out. And young Canadians, they're left watching from the sidelines while Ottawa calls it economic growth. This isn't growth, it's a fucking Ponzi scheme. The government borrows, it sells bonds to hedge funds, it inflates the housing market, and it imports new buyers and renters to keep the demand going. And when those new residents flood into cities with no new housing starts, prices soar. And the Bank of Canada tells you the system is resilient. Resilient from whom? Not the average Canadian who can't afford a down payment. Not the couple stuck renewing mortgages at a higher rate while inflation eats away at their grocery bill. Not the tradesman watching international money drive up the cost of land he helped build on. The entire model is built on a fragile loop. Borrow, inflate, import, repeat. But the loop like that doesn't last forever. Eventually the cost catches up and assets collapse, or the people just stop buying it. And when that happens, the only tool they'll have left is control. Control over your money, your movement, and your choices. And that's why this moment matters. That's why understanding how debt, immigration, housing, and monetary policy intertwine isn't just economic theory, it's survival. And which is why Tiff Macklem is scared, because if Canadians start using stablecoins, if you and your neighbors start transacting outside of that system, then the whole shell game begins to unravel. The control slips, the coercion weakens, and the spending stops. And the liberal Laurentian elite empire falls. So when they tell you that crypto is a threat to the financial stability of Canada, remember what they're actually telling you. That's not a threat to your stability. It's a threat to theirs. A threat to the system that takes your labor, your savings, your future, and mortgages, and it's a threat to fund their empire of debt. And I watched Tiff Macklem's press conference. He was calm, measured, But he delivered the most revealing line of that day. He said, "We think most households can hold out for about a year." Hold out. That's the bar now. Survival, tread water, maybe renew your mortgage without defaulting, maybe keep your job if the economy doesn't take a deeper dive. And this isn't a fridge scenario. If the Bank of Canada thinks this is their own worst case model, a year-long recession, GDP contractions, and mortgages errors rising to levels not seen since 2008, and unemployment pushing 10%, that's the future our financial stewards are warning us about. And it gets worse when you realize that this is entirely political. The tariffs, the trade collapse, the disintegration of the middle class, this is by design. Donald Trump, love him or hate him, laid this out plainly back in March. He said, Canada's taken advantage of us for years. That ends. And if they want to be part of our economy, maybe we talk about something bigger. Maybe they become part of America. Now, maybe this was classic Trumpian hyperbole, or maybe it was a glimpse at a real pressure strategy. Make the Canadian economy scream. Drive the cost of sovereignty through the roof and wait for Canadians themselves to start asking the questions. What exactly are we clinging on to here? Because if you're a working Canadian watching your mortgage renewal spike while your job disappears thanks to tariff wars over Quebec dairy quotas, do you really care about the sacred supply management model anymore? Or do you start looking at your paycheck, what's left of it, and then you look at your tax bill, the tax bill that the government takes half of your paycheck, the one you've been paying for the last decade while nothing around you improves, while public services degrade, while roads crumble, crime surges, and you've been told you're the problem if you complain. And then maybe, just maybe, you start looking across the border at a place where judges are elected, not appointed by liberal bureaucrats in Ottawa, at a place where you can move from state to state without being smothered by provincial red tape, where the housing markets, even in a downturn, still function. And maybe the thought creeps in, what if being the 51st state isn't so crazy? What if it means keeping your paycheck, your job, your house? What if it means having a real say in your justice system, your representation, your future? Because here's the uncomfortable truth. The people in Ottawa don't serve you. They don't answer to you. They're not accountable to you. They serve each other. The bureaucrats, the appointed judges, the unelected senators, the Laurentian elites. They run a system that has failed, and now you're the one who's paying for it. So maybe it's time to choose your future. Maybe it's time to choose freedom over bureaucratic decay. And maybe it's time to admit that sovereign system doesn't work for sovereign citizens. And maybe the idea of moving freely, economically, politically, and geographically across the entire North American continent doesn't sound that bad after all.